Today in this video, I'm going to be showing you every single type of order blocks in the chart, and I'm also going to be teaching you how to trade them and how to make money with an order block even after the order block has failed. Now, my name is Jehu of WallStreet, and I've been trading order blocks for the past 8 months, so I'm going to be showing you in this video, based on my experiences, how you can use order blocks to make money. So don't forget to watch this video through to the end and hit the like button if you got value. Let's jump into it. So right now, I'm going to first of all define what an order block is. So an order block is the last bullish candle before an impulsive bearish move, or the last bearish candle before an impulsive bullish move. Now, what do I mean by last bullish candle before an impulsive bearish move? In my chart here, you can see the black candles are the bearish candles. They are the candles that record how market went to the downside, and then the green candles are the bullish candles which record how market went to the upside. So bearish candle like this that went down, then right before an impulsive bullish move, that's before another candle that went up, and most times the bullish candles will engulf the bearish ones. Okay, I hope that is understood. Yes, so this is just this is just what an order block is, right? Last bearish before impulsive bullish move, and then last bullish candle before an impulsive bearish move. Let's say this is our bullish candle here. So this bullish candle went up right before this impulsive bearish move. So that's what the order block is. Now we have two types of order block, which you can see here. This one is a bullish order block because it is before the impulsive bullish move, so it's a bullish order block. This one is the bearish order block because it's just before the impulsive bearish move. Now I'm going to show you guys what these order blocks mean and how you can use them to make money. So the concept behind this order block is this: whenever price gives you an order block, you just draw out a very straight line in the next direction of the order block, and then wait for price to go and come back to the order block. Then you buy. Your stop loss is going to be below the block, right? Then you take your buy. Then if it's a seller environment, your entry is going to be just from the body of this order block. Whenever price comes back to it, you're going to tap on it and sell downward. I hope you understand. So these are the two types of order blocks. Now we have types of failed order block, because sometimes price is going to disrespect the order block, then it's going to now respect the order block again. Now let me give you the concept of failed order blocks now. First of all, we have the breaker block. In a series of higher highs and higher lows, whenever price destroys one of these, this place becomes a breaker block. So you just expect price to come back to it and sell from there. Most times price is going to give you something like this, which is liquidity, then you tap on it and sell. So this is a bearish breaker block scenario, and this is the breaker block here, yeah, and this is our liquidity. I'm not going to be talking about liquidity in this video, I'm just going to be talking about the failed order blocks. So this is a bearish breaker block. Now in the opposite direction, if we are in a downtrend, a series of lower highs and lower lows, and then price clears any of these lower high and gives us liquidity, then this is a scenario of a bullish breaker block. Now this is the first type of failed order block that I deal with, the breaker block. And then the second type of failed order block I deal with is the Quasimodo reversal, QMR. Now let me show you how that works. Quasimodo reversal, when we have your series of higher highs and higher lows, and then price takes out one of these higher lows. Now the other block that is here has failed, but this time around price will not use the opposite direction. Price will still go above it, and then most times before it goes above it, we just give you something like this. Then price will come back and respect the same order block on this other side of the chart. That's where you enter your buy and you hit your take profit. So this is our Quasimodo reversal drawn, and then here is our liquidity. If you have watched to this point, I'm sure you're getting value. Hit the like and subscribe button for more of these guys. And then secondly, we have in a sell environment something like this. Price takes it out, then comes back to respective. Something like this. Sometimes price is gonna give you liquidity, sometimes price will not give you liquidity, but all you have to know is if the order block has failed in this direction, it will be respected in the opposite direction, and if it has failed in this direction with the liquidity, then it will be respected in the opposite direction. Sorry, if it fails like this, it will be respected in the same direction, that's the QMR. Then if it fails and gives you liquidity like this, it will be respected in the opposite direction, that's the breaker block. Fails, liquidity, respected in the opposite direction because we were first bearish here, now we turn bullish, opposite direction, breaker block. Then here failed, liquidity, respected in the same direction, which is the QMR. So now let's go to chart examples. Okay, so first of all, right here you can see this point. What do we call this now? This is this is going to be a bearish order block because it's the last bullish candle before this impulsive bearish move. So right now we'll mark the order block from here like this. See that? Ouch. So after we mark the order block, you can see this is the candle we are marking, this green one here. So we're now going to zoom out. Aha. Let me first move this. So you can see price went above it, that means the order block failed. Then price came and respected it here in the opposite direction. So this is an example of breaker block. Now on this other side, if you look gently, you're going to see that we have this order block here. This is the last bearish candle before this impulsive bullish move. You mark it from something like this, and then this place that price move pull down before going is our liquidity. Whenever you see price pull close to your zone and it goes, that's inducement liquidity, which is making the point of interest more valid. Now next time price came and tapped on this, price just bought. Now if you look from here, you see that the last bullish candle was so long, so our next order block is this one. Now price came to the order block yesterday and reacted and started moving, and then I got my entry from a 15-minute breaker block here, right? That was the one that hit my SL just immediately before moving. But I mean, nothing is 100%, so so that's that about that. There was also a breaker block here that I used to catch this sell. I recorded that in my last video. You can check somewhere on your screen or in the description for the last video for this trade recap, and you're going to see how I got using the same breaker block model that I'm teaching. Now let me give you an example of QMR. Let's go to BTC. This is BTC. So let's drop down to 5. I think 5 is gonna be good. Okay, let's use 15 minutes. Alright, that's nice. Now if you can see here, if you look at this chart closely, you're going to see that price was making series of what? Lower highs and lower lows, lower highs and lower lows. Then after this lower high and lower low, price now cleared this lower low. So we had a sweep of this high, right? And then after that, price now continued to break structure to the downside. So what do we do here? We just look for the last bullish candle before the impulsive bearish move that failed. That's the last failed order block, and we draw it out. Now after you draw this out, your entry is just going to be here, and then your take profit is going to be your SL stop loss is going to be above this high like this. Sometimes price can hit your stop loss before moving in. That's how trading is. Now to target our take profit, first of all we have this trend line liquidity, so take profit is going to be here. That's the first take profit. Now the second take profit is going to be, we have another trendline liquidity on this same chart which I drew long ago from here. Now this is the second trendline liquidity that's going to be take profit, so your take profit 2 is going to be here, and boom, TP hit 1:11.77. so this is just an example of the QMR entry. You can see you have your liquidity here, this is your sweep and your break, and then that target the trendline liquidity. So guys, thank you for watching this video to this point. If you'd like to learn more about this, I offer a mentorship every single month, and then you can check the link in the description to message me on WhatsApp so that I can reserve spots for you. Don't forget to like, subscribe, and let's get this going.